let's give you some data. There's things pushing the market up and there's things pushing the market down, right? Interest rate is just one of many things that pushes the market. So let's talk about the market drivers, starting with the economy. Now, real estate doesn't really care that much about the economy, interestingly enough. It really cares about supply and demand. However, when people feel like the economy is doing pretty well, they're more likely to buy a house. So that's a soft upward push, and Texas especially is doing really quite well. Consumer confidence. It's interesting, it's measured on a 0 to 200 scale. I don't know why, but anything over 100 means people believe the economy is growing. Anything under 100, people believe the economy is contracting. And right now the score is 115, so it's pretty solid. We're not thinking we're in a recession. We don't seem to be feeling like we're going into a recession. When people don't believe they're going into a recession, they're more likely to buy a house. So that's something that pushes things up. Unemployment, another one. People don't have a job, they can't buy a house. The unemployment rate is solid. Below 5%, anything below 5% is considered good. US is 3.7. Most of the cities in Texas are in line with that. So unemployment is pretty good. Job growth, there's another big one. When the economy is growing and the jobs are growing, people are more likely to buy houses, so that pushes up the demand. US is growing at 1.7, Texas is growing at 2.7, so that's a good one. Stock market. Now, real estate really doesn't care about the stock market, except for this. When the stock market goes up, when people's 401ks go up, they feel wealthier. Even if they haven't realized the wealth, they feel wealthier. And when people feel wealthier, they're much more likely to buy real estate or to move up, to buy a bigger, nicer piece of real estate. So that's how it affects real estate. It increases the demand. So we got another one pushing things up. And then we got interest rates. Interest rates are higher, much higher than they were before. And because they're higher, mortgages are a lot less affordable. And because they're a lot less affordable, fewer people can buy a house, right? So that has constricted the demand, and that's pushing prices down. Home price trajectory is flat. So I'm going to put that as neutral. It's not going up, it's not going down, it's been flat. It's started to tick up a little bit, but we're going to still call it flat. Closed sales trajectory, this is starting to turn. But in most of the cities, it's still been kind of down. It's starting to turn for the first time in a year and a half. But in most cases, it's been down. Pending sales trajectory. Pending sales is starting to go up. And obviously, pending sales precedes closed sales, right? So when pending sales goes up, eventually closed sales goes up. So there's definitely some movement there. Active listings are going up. We're putting some more inventory on the market, but it's just barely keeping up with the demand. So we're going to call that a neutral. Months of inventory, I gave you that before. Anything less than 6 months of inventory is considered a seller's market, and that's an up push. Housing permits trajectory. This is, are we building enough houses for all the people moving here and having babies, need a place to live? We are building more inventory. We're building more houses, but we're barely keeping up with demand. In-migration. Now, this is actually a really big one. Migration is the ratio of people moving in to a city or state versus out. Okay, because when more people move in than out, when the population grows, you have growing demand. Everybody needs to live somewhere, an apartment building, a house, or something, right? So growing demand is something that pushes prices up very heavily. So probably this is one of the biggest important things on this chart here. And Texas has huge in-migration. I think California has a program. They pay people to move to Texas. Is that how it works? I don't know how it works. It's something. During the last census, California lost 500,000 people. Texas gained 500,000 people. Where do you think they went? It's like pretty obvious, right? Everybody's moving to Texas. Greatest economy, greatest people, greatest weather, greatest everything, right? It's a beautiful thing. And because of that, everybody's moving here, and people keep having babies here, and that means we have a lot more people who need a place to live. And that's pushing up the demand, which is another push up on the prices. Construction, now this is interesting, construction labor growth. We have a problem. Contractors are dying. Right? The average general contractor is like 58 years old. It used to be like 56, now they're 58. Nobody's becoming a contractor. Right? It's starting to change a little bit, but I mean, if you got a kid, don't send them to college. Give them a hammer, okay? I mean, they're gonna make a lot more money, no student debt, they're gonna be in a much better life. I mean, just give them a hammer. I mean, seriously. You know, there's like this story, this surgeon had a toilet backing up, so he had to hire a plumber, right, to come fix his toilet. The plumber fixes the toilet, gives the surgeon a bill. The surgeon looks at the bill. Oh my God, these are like surgeon prices. And the plumber says, yeah, I used to be a surgeon. You know, it's like, I'm telling you, I've been building houses for 20 years. Used to be you could build a house for like $120 a foot. And now you're lucky if you could build a house for like $300 a foot. I mean, it's crazy. Right, $200-300 a foot is just like normal now, right? And it didn't used to be like that, but it costs a fortune. It's all labor. It's all. I mean, construction costs have gone up a little too, but most of it is all labor. So, and that's a problem. So that's keeping the demand down, and you know, it's getting more expensive to be able to build new houses. So that's another thing that's gonna be an issue. And then there's like wild cards, you know, interest rates. Are interest rates going to go down? You know, the Federal Reserve says, yeah, we're probably going to lower interest rates, but you know, we're kind of taking a look at the inflation thing. That doesn't seem to be correcting, so maybe it won't go down or won't go down much. We don't really know. There's an election thing going on this year. Will that affect the market? I don't know. Got some wars going on, so you know, there's always some wild cards. But when you put all this together, you got things going up and you got things going down. And I would say this one is changing. So that red's about to become a yellow and then probably a green. And that leaves one thing, interest rates. So there's a lot of upward push on the market. There ain't much downward push on the market. And what's going to happen? I don't know. So let's do a survey of the audience. Who thinks house prices are probably going to go up? Who thinks house prices are probably going to go down? Okay. Who doesn't know? I don't know. We don't know. But I'll give you a forecast. We believe the market bottomed over the last quarter, and we expect interest rates will probably start to decline a little bit. The Fed says 0.75 points by the end of the year. Maybe less, we don't know. Because of this, we expect sales volume to increase by 5% and prices to be up 5% this year. That's our forecast. And I will say we've been doing a forecast for 20 years, and our forecasts are pretty remarkably accurate. And I'm not like saying we're geniuses. We don't know. You know, the data, by the way, is pulled from Texas A&M School of Real Estate. All this data is online. We're not making any of this stuff up ourselves or figuring this out ourselves. We're just pulling data out from a lot of different sources. We also post our data on our Facebook and Instagram page, so you're welcome to have it as well. But I will say this, my observation going back 20 years, and I don't do the forecast, I'm the reporter of the forecast, I didn't actually create the forecast. But I will say, real estate is not that hard to predict. The stock market, in my opinion, is impossible to predict. It's all speculating. The economy is pretty darn difficult to predict. Real estate, not that hard. And the reason is because it's all supply and demand. And we know almost everything about the supply and the demand. We know how many people we have. We know how many houses we have. We know how many people are having babies. We know how many people are moving here. We know how many people are dying. We know how many houses we're building. We know how many houses we need. We know how much we're going to have, and we know how much we're going to need. Right? I mean, we know everything. Right? There's not much we don't know. There's a few little variables. Right? We don't know exactly what's going to happen with interest rates, but there's a lot of things that are known. Right? And that's why I would argue that predicting real estate is not as complicated as predicting a lot of other things. And that's what's going on in the marketplace.